Hey traders, this is Ron Haydat Market Tamer. Happy Monday from Viva Las Vegas. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. All right, we're going to kick off with the S&P. Here we go again. Trade war is in the news, as if the world is going to end, just like they were doing back in October, and then the worst December on record. At one point, now we're getting more selling pressure over here. The media is falling all over themselves and, in their usual fashion, making it sound like it is the end. But this too will pass, just like it did last time, in my humble opinion. Right now, though, whether you like what's being done, you don't like what's being done by the administration, I prefer to put my fingers in my ears and just go to the charts. I do have a long-term opinion, very, very bullish. I think this is completely nonsense. Certain companies, yes, but they'll be rebalancing. They'll shift their where they're buying and making their product. All that just gets handled. The world economy is not just going to stop because of a tariff spat. That's just not how it works. But if they're selling, they're selling. So what do? We just go to the moving averages. I think those are a great litmus test to try to see which side is the current sentiment on. And I said to you guys, keep an eye on that orange line, the 50-day SMA. And by the way, we're back to using profit charts for tonight from Thinkorswim. We broke the 50-day. This is not good news for the overall market. The S&P is 500 companies. They're not all equally weighted, though. The target is going to be the 200-day. So if the bulls had any hope of trying to make this rebound, they needed to not lose the 50-day. Well, they've done that. And I talked about these probes sticking the foot in the water, not a good sign. Well, boom, here we go today. Down we went. 275 now is the marker. We get below that, that is bad news. And then the daily charts flat out go bearish. So I would put 275 on as an alert just to keep up to date. If we go to the Qs, the NASDAQ 100, same thing, sort of. We were probing that 50-day Thursday, Friday, and what happens? Today, gap lower, closed sort of near the lows of the day, target 200-day. With the 50-day falling, it now is moving bearish, but when the 200-day falls, there's no doubt anymore because the markets were above all these moving averages. When the 200-day falls in purple, more bad news. Now the Dow, it already had lost the 50-day. It's now testing the 200-day, which is right around 250, 250. If that falls, more bad news. There is no support in here. The December lows on the major indexes is the next major support level. I'm not saying we're going to get there. We could put some Fibonacci retracements in and so forth, but if this selling picks up steam again, we could end up having a massive range where the highs are around 265 and the lows are in the low twos. It could turn out to be something like that. Let's not get ahead of ourselves, one day at a time, but right now in these daily charts, you can't be bullish. There's too many moving averages that are now broken using technical analysis, in my opinion. Let's take a look at IWM. Russell 2000, down 3%. This one, too, was probing the 50 and the 200, right? The 50 in orange, 200-day in purple. Boom, down we go. I said, even though it looks like tweezer-ish bottom, where it's dipping and it's trying to hold on, it's a sign of weakness, if you will, at highs, not strength. If that would have been happening down here, it's more believable, not up here. We roll over, target 150, below 150, you guessed it, the December 24th Christmas Eve massacre lows. MDY, the mid-caps, blew through the 200-day today in purple, target 335. If we actually, let's just look at the VIX real quick. $sign VIX and Thinkorswim. It was only up 28% today. I say only, but you would think the market completely falling apart, this thing would have launched up, right? So the market really didn't fall that far apart. They talk about 700 points or so in the Dow being, oh my goodness, this is crazy. But the Dow is practically at all-time highs recently. We're up in lofty territory. So 700 points today is not the same 700 points as 2 years ago. They're two different animals. But regardless, I would have expected the VIX, guessing it would have been up a little higher. Here's the thing. I talked to you guys about not doing standard technical analysis on the VIX. However, we had an explosion up from around 13 up to 20s 21, 22. We sort of back tested the explosion breakout point, and now we're rallying. This is, I would say to you, this is bullish. This is charge, take a break, and charge. So right now the VIX is also bullish, which is bad for equities. Now let's take a look at the banks. They lost almost 3% today, again below the 200-day. We're going to go back to this little reversal in March, just like I said in the weekend video. Here are the transports, down almost 3% as well. Target is 180. They did, if I zoom in again, these were probes. It's probing, it's probing. It's sort of like breaking the door down a little bit, breaking it a little more. The door is still hanging, and then they just go, boom, door's broken. Watch 180, below 180, all the way back down to those December 24th lows. SMAs, they really got beat up today because the concern about the trade wars. And we'll get to Apple here in a second. They were down 4+%. Target 200-day moving average. They too had probes right around the 50-day. Again, I don't like tweezer bottoms up near highs. And 100, another 5% lowers the immediate target below there. You could say maybe, yeah, you know what, 100. That's just a good number. Then you go back to, like I said, the December lows. I want to talk about, let's just do Apple actually, nice little transition. So Apple was down pretty good today. 185 ended up finishing at, and it broke the 200-day moving average right here. There's an unfilled gap in the low 170s. I would say that's the odds-on bet right now, maybe 15 so bucks lower, and then down to the earnings gap around 155. Now, Apple's tied to, I was reading an article and they said it could affect iPhone prices by as much as 160 bucks. There's outsourcing, there's moving stuff around. Some folks are saying, oh, you can't do it, like China's the only place it can be done. There's never only one place something can be done. It's a very dangerous thing to say. It makes for good headlines, but it's a bunch of baloney in practical life. So Apple will figure it out. Whether or not the costs get passed along, we'll see. But they also, the Supreme Court apparently said that there can be a class action against them for the App Store. That's not good for Apple either. And, so there's two negatives right now. If I was trading Apple, where I would get concerned was a breach of the 50-day. Right now is sort of a calm descent. You now broke the 50 in orange, the 200 in purple. At this stage, it's down, 25 bucks or so from its highs. But now there's two events, potentially the tariff issues, actually three events. Tariff issues, the market sell-off, and now this App Store issue. Plus, they lost with Qualcomm. So there's a couple big news headlines that are all negative on Apple. Let's take a look at Boeing. Boeing was down almost 5% again today, target 300-ish. So it's still 10% lower. Remember I said watch the 200-day, right? It's just these moving averages are just good litmus tests just to see what the sentiment is around certain stocks. We cut through it like a hot knife through butter on the 7th. 3 little dojis, and now here we go. Target 300, 290. Google broke the 200-day. Now there's so much chop here. Google's not as easy to find a key support level, so it could stop anywhere in here because there's all this back and forth, but it too broke the 200-day. That's important just to know. Sentiment changing. And here is Amazon, down 3+%. It's on the 50-day. We look to the 200. Then there's shelf support at 1600. If it would get all the way down there, or 220 points lower, then 1350 would be the target. And if you want to look at a stock that was actually up today, General Mills, up almost 0.5%, and it's still doing its bull flag. Something above 52 would constitute a new breakout. And with that, I will wish you guys all the very best. Again, I'm in Vegas this week, so I do not know how many videos I'm going to do at night, just depending. If the market's not moving much, there probably won't be a video. If it is really going nuts, I'll try to sneak in a video. And if you're here and you want to meet up for a drink or just say hi, just let me know. Send an email to CS, which stands for customer support, @markettamer.com, and I'll be happy to meet up with you guys. Have a great day. See you next time.